All right, so welcome back. I am Jason Yarusi of Yarusi Holdings. This is your weekly webinar. So I'm Jason Yarusi of Yarusi Holdings. We are a multifamily investment firm here in Tennessee. Today, we are talking about tax strategies for investing in multifamily real estate. So there's a number of different options that you can focus on. Today, I want to focus on 3 different use cases of tax strategies for investing in multifamily syndications. The first one can be a deferment of taxes by using a 1031 exchange. Notably, if you have a sale of a like-kind asset, notably, you can roll those proceeds and profits into a like-kind property and forego, for now, your tax liability. Ultimately, many people say that you can use a 1031 exchange to push forward your tax liability until you die, and then it can move on to your heirs. But on that front, using a 1031 exchange is a great way to continue to roll your funds forward and not be exposed to the tax liability today. The next one is investing with a self-directed IRA. Many times our IRA, if you have an IRA, is just exposed or open to what is the custodian's available investment options here. So you may be invested in the stock market or in different other categories here where your money is exposed to something that you have no control over. And that's what puts you at a limitation with that IRA, is that you are having a custodian basically invest those funds on your behalf. And most of us out here, because you're listening to this today, want control over our future. Using a self-directed IRA gives you the ability to move your funds into a custodian that allows you to self-direct into other asset classes beyond the traditional forms of stocks or mutual funds. So what you can invest into is a real estate investment. Now, notably, there's a few other provisions here. You cannot actively control the investment or have active participation in this investment. So you will self-direct those funds into another investment option, which could be a syndication. We have a lot of investors who utilize a self-directed account to be able to use and invest and get the rewards that come with real estate from investing in a multifamily syndication. And the third would be other ways to basically use deductions to your benefit. That could be the use of cost segregation. So through depreciation, we are able to pass through and offset some of your gains with losses. Now, this is not going to apply for everyone. If you have a self-directed IRA, tax benefits are already coming to that account. So notably, the depreciation benefits are not also going to pass through to you. But notably, this is something to speak with your accountant on, but you can benefit from a cost segregation study. And what a cost segregation study does is it basically allocates to a financial engineering study the different components into proper year categories. Everybody who has a carpet in their house, that carpet doesn't last for 20 or 30 or 40 years. And so that will be broken down into the proper bucket. So items can be pushed forward into 5 and 15-year categories, and that can push forward your losses. And some of the recent changes that had occurred in the tax system here is that you're able to take that for bonus depreciation. Now, one note here, 100% bonus depreciation, meaning that you're able to push forward all those losses in the year one, ends this year. So it's going to end this year. The next year, I believe it's only 80%, and it's going to continue to roll backwards until we get back to just those 5 and 15-year categories. But this is a great way to be able to take deductions to offset your tax liability. So again, today we talked about utilizing a 1031 exchange, utilizing a self-directed IRA, and also utilizing depreciation benefits through a cost segregation study. If you want to hear more about any of these strategies, please reach out to us here at Yarusi Holdings. You can find us at yarusiholdings.com. All of our contact information or our form is below, and you can also look to learn more about the investments that we do here at the company. Thank you so much for checking in. If you like what you hear, make sure you go down there, you hit that follow button, you give us a like, you give us a comment here, because we love hearing from you and we love to have you join us each and every week here on the weekly webinar. Talk to you soon.